Kotak Bank and City Union climb after brokerage firm Macquarie upgrades their stocks from neutral to outperform, citing cheap valuations and favourable risk-reward.
Sun Pharma slips 22% after the company's Dadra unit receives a warning letter from the US FDA that states violations to their current good manufacturing practice regulations.
PNB Housing Finance slides more than 4% after 5.5% equity changes hands in multiple block trade. Sources tell CNBC-TV18 is the Asia Opportunities and General Atlantic Singapore Fund who are likely sellers.
MAS Financial surges as sources say the company plans to raise up to 500 crore rupees via QIP. The stock is up close to 2.5%. Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangalam Malu. Well, the headline index is as flat as can be. There's a fair bit of action though in the broader markets. You have a number of stocks advancing close to around 3:1 that's declining. Hey Mangalam.
Hi Nigel, nothing really to worry for the markets because yes, after a stellar run we ran into a bit of resistance. And the good part is that, those dips are being bought into. So even as the frontline indices are consolidating, the broader market is doing well. And today, after a couple of days, we're seeing the market breadth look extremely strong with nearly 1,700 stocks in the green for about 600 in the red itself. So there you have it. Even as the frontline indices are off highs, we have the mid-cap index at the high point of trade and a fair distance between both the advances and the declines. But let's talk about important corporate stories. Proxy advisory firm IIAS has opposed the reappointment of Gautam Singhania as Raymond's chairman and managing director. They've also voted against his reappointment on the company's board as a director, citing his remuneration, which was higher than the peers. We have Hital Dalal, who's joining in. She's the president and COO of the IIAS, or the Institutional Investor Advisory Services as we know it. Thank you, Hital, for joining in. First up, if you could explain, the rationale for this and what is it that you think that, could be the remediation for this for you to turn?
Sure. Thank you for having me. Good morning, everyone. Look, Raymond, there is a backstory, right? Nawaz Modi accused Gautam Singhania of domestic violence and the fact that, she's also claimed that she's a whistleblower of sorts and that company money is being used for personal benefit. So what would you essentially call CEO excesses. The board has been silent, right? We wrote an open letter to the independent directors of the board when this event happened. And the board therefore put out a holding statement. But there's really been no clarity on what has finally transpired given these allegations. So we asked a set of questions, right? One is that is the conduct of both directors or either director in keeping with the code of conduct? Is it in line with what the brand sort of signifies? Are there potential criminal cases, or is the company now open to litigation or any of these instances because of this allegation, assuming there is any merit in these allegations? Has the board even done an investigation to understand what the issue is, whether there is any merit in any of these allegations? And if there are CEO excesses, for example, have there been any sort of measures to curtail it or to sort of stem it? And what is, let's say, the recovery process that they're implementing? This entire battle which is happening, and clearly a lot of it is in the media, is it a distraction for the, for the controlling shareholder or for the chairman and the managing director in terms of running the business? So none of these questions are actually getting answered, right? The entire shareholder notice is silent on this issue. And after a holding statement, we haven't heard from the board. So I think that's really the clarity that we first expect the board to put out and engage with its investors in a more transparent manner before we can sort of think about changing our view.
All right. Hi, Hital. Morning, and thanks a lot for joining in. Have you spoken to anyone on the board? Have you reached out to anyone from Raymond?
Look, as a process, we are not allowed to sort of talk to the company once the shareholder notice is out at the time we put out our voting recommendations. This is part of the regulatory mandate, and therefore we are unable to, at the time of voting, at the time of making this recommendation, reach out to.
Okay, all right. So what could be, the remediation measures now? Clearly, you believe that lots needs to be done at the board level as well as at the promoter level. So could you suggest a couple of pointers then that shareholders should watch out for to make things better or good?
I think at the first level, what the board should have done was appoint an interim CEO, have the whole issue investigated, and therefore then come out with a course of action. none of this has happened. So at this point in time, we would recommend that shareholders vote against the reappointment of Gautam Singhania as a director, and therefore compel the board to at least drive in a succession plan and put in an interim CEO and get this entire matter sorted. The other reason why we've also voted against, Gautam Singhania's appointment as managing director and chairperson is the entire resolution of the remuneration structure that they're proposing. It's completely open-ended, right? The resolution essentially says that he'll be paid remuneration in excess of all regulatory thresholds. Now, regulation puts a cap on the quantum of remuneration that a CEO can be paid, and if they want to breach it, they need to take shareholder approval. But what has essentially happened is that this leaves the entire play open, and he could get if you just look at FY24 profits, his number could be in excess of what 35 crores. So, but in excess, but we don't know exactly where it ends. So I think that open-endedness of the resolution itself has also compelled us to vote against. I think these are telling signs of where the governance structures are as far as companies are concerned in terms of clarity and the transparency of their disclosures.
All right, and just to finally, watch this from the other side, say, just for argument's sake, is there a case that maybe one is overstating the impact of this on the business itself? Because from a shareholder standpoint, ever since the case came to light, from the start of this year to now, the stock is doing reasonably well. The last quarter, fundamentally, numbers were fairly good as well. They reported the highest ever revenue, EBITDA, as well as profitability. So could there be an overstatement of or over-attribution to the importance of this as a risk?
I think when you look at governance structures, right, and we have data which shows that well-governed companies over a long period of time tend to outperform the index, outperform companies which are not considered well-governed at a portfolio level, and they perform better in price as well as stock beta. In the short run, though, that correlation will not always be true. So what you're seeing essentially is currently a short run. In the longer run, when things are difficult or over a long period of time, poor governance structures tend to come back and haunt investors. So therefore, from a governance standpoint, if the companies have weak governance structures, boards need to strengthen and do this and sort of build better structures. As far as the risk is concerned, right? I think at the end of the day, you have to ask the question of, is this the tone that you want to set at the top? I mean, there's enough. You've heard, culture eats strategy for breakfast, which has essentially been established time and again through governance failures that we've seen not only in India but across the world. And therefore, this risk continues to remain. Is it immediate and something going to happen tomorrow? Maybe not. But over a period of time, yes, this is indeed a concern as far as the stock is concerned.
All right, take that point. Thank you so much for putting your points and thoughts on board. Hital, need a good discussion. We will speak to you, as and when we have more clarity on the situation as well. Thank you for joining in. All right, with that, we'll shift focus to a special segment. We get you a few ideas of profit coming from our colleagues at Money Control Pro. Bharat Jinani of Money Control Pro joins in to talk about a stock that he's been tracking closely.
Today's idea is with Mrs. Bector's Food Specialties Limited. The company is announcing its production capacity in both the biscuit as well as the bakery segment. The company outlined a capex plan of 570 crore rupees over FY24 and FY25. This would result in a production increase of 25% on an overall basis. The company is introducing new products with a focus on premiumization. Recently, the company introduced cashew and milk biscuits, as well as several products in the frozen bakery category. The share of premium products has increased 20% YOY in FY24 and now stands at about 37% of the overall sales. The company is also enhancing its distribution reach in both the biscuit as well as the bakery segment. Recently, the company acquired the rights of Cremica brand for the bakery division. This would help it to better penetrate the North Indian market. The company has guided for a mid to high teens growth in the current fiscal, which is well ahead of the industry. The company has also introduced a cost control program, Project Impact, which would lead to a cost reduction across the business functions. Mrs. Bector's is a quality FMCG stock with a strong return ratios. At the current market price, the stock is trading at a PE of 43 times FY26 earnings projections. Investors can add the stock in the book.
Thanks a lot for that, Bharat. Well, for the time being, we'll slip into a short break. When we come back, we'll get chatting with the management of Quick Heal Technologies to discuss their business outlook at large. Stay with us.
Welcome back. Markets doing well. The stocks that were seeing some bit of pressure in yesterday's trading session are bouncing back today. So have something like a Honeywell, which has moved to the high point of trade. Hindalco is doing extremely well. It's been a metal sort of morning with a lot of these metal stocks actually picking up. We have India Mart, GSPL and Samvardhana from the broader markets also seeing some traction. One of the stocks on our radar is the cyber security firm Quick Heal Technologies, which was recently appointed as the member of the US Artificial Intelligence Safety Institute Consortium, making it the only Indian firm from the cyber security space. And that is important to track because artificial intelligence, as we're talking about, is a big opportunity. But does that opportunity translate into business? We are joined by the recently appointed CEO, Vishal Salvi. Thanks a lot, Vishal, for joining in. The street is excited about the AI opportunity. What we want to know is how much does this increase your, overall addressable market by, and how much of that actually comes down to your revenue? Because while your total addressable market has increased by multi-fold over the last few years, your revenues have remained stagnant between 200 to 300 crores.
Yeah, thank you very much for having me here today. And so when you look at the evolution of AI, we look at it as any technology evolution, which becomes the foundation of how we leapfrog as we digitize more. And same has happened with the cloud adoption, and the same is happening with AI. So AI is an additional tool and a technology which is available for any digital business to survive in future. And it obviously creates a great opportunity to optimize, to become more sharper as far as cybersecurity is concerned. There are clearly great use cases and opportunities that get created in terms of how we can make our products much more simpler, much more easy to operate, and thereby start getting closer to solving the problem of cybersecurity, which is actually to stop the threats impacting the enterprises. So the way I look at it is that the AI is something where is going to become more fundamental and foundation for your business to exist and your digital business to exist. But fundamentally, business models will continue to evolve in terms of what's the problem that we're trying to solve. So AI is going to help you that, but finally you have to have a good business model in terms of how you introduce innovative products.
The problem that shareholders are looking at, Vishal, right now is that the revenues are stagnant between 200 to 300 crores. So how do you solve for that? AI or no AI, when does your revenue accelerate, at what rate and to what level?
Yeah, so see, we have been pivoting significantly as a company. As you know, if you look at the history of Quick Heal has formed as a consumer antivirus product. We have been deeply innovative. We now have a market share and market leaders in the Indian market. But having said that, overall, if you look at the consumer AV business had multiple headwinds, and hence it is the reflection in terms of how we have performed in the past few years. But I think we've been pivoting significantly to enterprise security, and that's the work that has been happening behind the scene for the last 3 to 4 years. And by doing so, 40% of our business mix has now moved to enterprise security, which is significant because that's where the growth is happening as far as cybersecurity business is concerned. So what you can anticipate from our side is to continue to invest and continue to pivot to enterprise security. And then what you need to look at is not just global, but Indian context as to how the enterprise security business is growing. And you can expect that we will start seeing that growth as far as our business models are concerned as well.
Okay, all right. Hi, Vishal. Good morning and good to see you. Let's put it into numbers then. Last couple of quarters, you've been doing a quarterly run rate of close to around 80 crores. I recall a few quarters ago, you even hit the 100 crore per quarter mark. Do you see that happening yet again at some point of time during this year or next? Do you start moving to that 100 crore per quarterly run rate?
Great to see you, Nigel. Basically, when you look at it, we don't give a guidance in terms of, how we're going to do in the short term. But what you can anticipate and expect is that we have had multiple of our cybersecurity enterprise stack, which has just been made and rolled out into the market. And we're extremely bullish in terms of how, we expect them to perform. And we want to make that change in terms of getting from our current micro and SMB segment into mid-market and the lower end of large enterprises. So that's been our focus. The second is about, going into government business, Atmanirbhar Bharat, Make in India. We are the only large cybersecurity product organization from India, and then want to make the global footprint. So all these things are definitely going to, yield the growth that we are anticipating. I'm not going to give you a color in terms of, when we are going to reach 100 crore on a quarterly basis and so on and so forth. But clearly, you can expect us to grow faster than the average increase, the run rate that is there in the enterprise security product market. And that's really how we're positioning ourselves, right?
So how much, what is the increase you're factoring in the enterprise security market?
So we are right now at around 40% in terms of our global, our revenues, split between consumer and enterprise.
Correct.
We were 20% just 3 years back. So you can see the growth that is happening. Generally, the enterprise security product business is growing at around anything between 12 to 15%. You can expect us to grow higher than that growth rate in the coming quarters.
How much higher? 1.5 times, 1.2 times, 2 times? I mean, what is the outpacing you're looking to do in comparison to the industry? Quick heal versus the industry on the enterprise side of things.
No, we don't want to,
what have you done? Okay, what have you done in the past?
No, so we have grown on. Look, basically, when you look at in terms of our enterprise stack, we have now grown at the pace of the industry, and that's because we have been building this product for the last 3-4 years. So we have been on par with the industry. Now is the growth because we have introduced the products, we can grow faster than them.
All right. What about, the payment terms of the enterprise business? Because I look at it, your debtor days are at 165. As you were building that business, because it's an enterprise business and not a consumer business, one assumes that maybe payments come a lot later. It's reflected in your cash flow from operations as well. 2018, it was 94 crores. 2021, it was around 99 crores. 3 years later, 2024, last year, cash flow from operations were just about 18 crores. So with the enterprise side of things improving, does that have a further bearing on your working capital? Can you give us a sense of what you're targeting in terms of working capital days receivable?
I think a lot of the headwinds that we're seeing in our collections are largely from our consumer business, because obviously the impact aftermath of COVID and how the degrowth has happened in terms of overall adoption of laptops and adoption of paid antivirus. Our collections and our DSO in enterprise businesses is better as compared to our consumer business. So in fact, it is going to give us relief in the long run in terms of how our collections can improve. So I think we are in a better space once we start seeing a better enterprise mix compared to a consumer.
All right. And what is better? At what level does, do things start looking a lot better? Are you looking at 50%, 60%? Or 70% contribution from enterprise? In the last 2 years, you've doubled from 20 to 40. And because you're saying that the pace will grow much more than what it has in the last 2 years, do we see that hit the 50% mark in this year, maybe 60, 70% over the next couple of years? What's your aspiration here?
Yeah, I think you have to just look at our past to see what our future holds. So we will definitely we'll do better than how we have performed in the last 3 years. Because of the way in which we have been investing and releasing the products. We look at our product range into 3 categories: Horizon 1, Horizon 2, Horizon 3. Horizon 1 is what is our current cash cow and our core. We were deeply pivoting towards our Horizon 2, which are the products which are in the market, and Horizon 3 investments which are currently going on. You are anticipating the DPDP bill and its positive impact in terms of widespread adoption of cybersecurity and privacy-related aspects for the body corporates. We have a product which will solve that problem. And so clearly what we are seeing is that we will do that pivot. So I think the way you are putting it, that's exactly how we see it panning out going forward.
All right, Vishal, tell us more about this DPB. I think it's data protection bill that you're talking about, right? How does it, I mean, what kind of an opportunity does it throw up for a company like yours? If you could give us, you're focusing more on the qualitative aspects rather than quantitative aspects. So if you could give us some color on that front, because that's going to be the big focal point, the data protection bill.
Yeah, I think, before we talk about the business, I think it is, extremely opportune time that given the way in which India is digitizing and the India digital stack is becoming a benchmark for other countries to follow, I think it is important that we also set the benchmark in terms of how we build cybersecurity standards, in terms of how it is adopted within the industry and the government. We have seen that whenever any data protection acts have come into different parts of the world, there has been a marked adoption and increase of cybersecurity awareness and implementation, including privacy. So we expect that the same thing is going to happen as far as when the enforcement happens, because the bill is already active. We have seen the IT minister talking about it being released for consultation for enforcement. So we expect that within the next 5 to 6 months, it will start getting into implementation phase. So clearly from our point of view, because we are well positioned and we are giving to our customers a complete end-to-end enterprise security stack. We just are not one product vendor. We are not just an antivirus company anymore.
Right.
We are a cybersecurity company. So that pivot has already happened. So we provide that as a holistic solution. So once this happens, we will start seeing a widespread adoption of the solutions that we have. And that obviously, can create a significant impact in terms of how we see our growth.
All right. Thanks a lot for joining in. We hope that, you join us more often and we get to understand a lot more about your business. Data protection, security, like you said, is extremely important. But more important is the way you are positioning your company. The street is expecting a lot out of you. Let's see whether, you'll deliver going forward or not. You all have tall targets as well. If you just take a look at the way, the quick heel stock price has moved over the last 12 months or so, it's more than tripled. Over a 225% gain is what we've seen. Today, it's up around 5%, but a longer term chart tells you that a lot more is expected in the price at least. Let's see whether the company goes ahead and delivers on that as well. Vishal, thank you for joining in. Take a short break, come back, get you more on the markets and individual stocks on the other side. Well, at the top of your screens, you will see that all the indices are doing well, mildly in the green for the frontline indices. The mid-caps doing well, and the mid-caps have two sets of stocks which are doing a lot better. One are the metals, the other are fertilizers. So let's see what the second half of trade brings for the frontline indices and a lot of these stocks. From Nigel, me, the entire team, thank you for watching. That's a wrap on this edition of Chartbusters.